to settle the funds or any digital assets actually payment through fiat payments. So this opens 11,500 endpoints in over 200 countries. It would be looking towards end of 2025, early 26. I'm putting my leg out there, right? Where we will have potentially a spot of live product in Swift.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Chainlink bringing over 11,500 institutions together. And yes, guys, you heard that correct. And they had this video up on YouTube and then took it down. But I did record it. Hopefully they put it back up, but I'll put it in the Patreon. So therefore you can watch the full video. But I thought they were going to say 2029 or 2030 when this will be active. No, they said it'll be live by the end of 2025 or the beginning of 2026. Yes, you heard that correct. And I have a feeling why they took it down, because you also see two of the major cryptos who Swift is going to be using. That's all I'm going to say. Just like I stated, I'm going to put that in the Patreon. Now we have Jay Clayton talking about Elon Musk. And we see Elon getting into politics. They have it all over media. All the projects he's running, and he got time to act in the play. So we know something bigger is coming. We know politicians are nothing but paid puppets. And we know for a fact what Trump is up to. Remember, his job was to land us in the fourth industrial revolution. And who's leading all the sectors in the fourth industrial revolution? That's right, Elon Musk. Now we had Steve Mnuchin on CNBC. I didn't go over it yesterday because I did the Jerome Powell video, but I definitely talked him up. And he says he's not going to join Trump's cabinet, but he'll be happy to help on the outside. But we know that definitely may change. And we have China's $1.4 trillion for hidden debt. And guys, what is that debt most likely? That's right, U.S. Treasuries. And if the masses are put out of work and the machines are taken over, guess what? It's going to be less taxes. And that's the reason why you keep hearing tariffs and tariffs. Tariffs are nothing but taxes. But that's going to start a trade war between the two superpowers. And then we know the drums are going to get louder. And we have the Fed. Will they continue to cut rates? And I told you in the short term, no. Because that's basically what Jerome Powell stated. If yield rates are going to stay high, which I see no reason for them to come down, he's not going to do anything just yet, because we still see the M2 money supply increasing. But they have the savior, the machines, and the digital currencies. Remember, they cause a problem, wait for the reaction, and run in with a solution. When they keep talking about growth, growing itself out of all this debt, they're talking about productivity, the machines. They don't need a break. They come to work 24/7. They don't need insurance, and they're definitely not going to talk back. And with digital currencies, the machines now have money, so they can run the economy without a human involved. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
If Elon Musk wants to spend, 20% of his bandwidth making the country better, we should figure out how to do it.
Hey, Stephen, before you run, two very quick things. You want to be the Treasury Secretary again, or play a role in this administration?
I mean, it was a great honor to serve President Trump and be Treasury Secretary, and I'm willing to help in any way from the outside. But there's
but it's not stimulus in the traditional sense, in that it's not being used to stimulate demand. So 60% of it has been allocated to a program for local governments to issue new bonds over 3 years, including this year, to pay off what the government calls as hidden debt. So this is debt that's off balance sheet or unrecognized, which has been a primary source of risk in this economy. So in addition to that, local governments will be allowed to issue more special bonds over 5 years to raise funds for the same purpose. The stimulus is indirect. So the finance minister said that $85 billion over 5 years would be freed up because of this refinancing of the debt that local governments would be able to spend. The finance minister also added that new measures would promote state purchases to buy idle land and unsold homes, so that in theory would help the property sector. But there's nothing in this plan that directly helps and gets money into the hands of consumers and companies to stimulate demand.
Eunice, the question of tariffs that we were just discussing, over here people are worried about inflation or what that could do to consumer spending power. But how do we expect that to factor into future kind of stimulus policy that could be coming out of China?
Well, you know, in the run-up to this announcement, there was a huge expectation that the stimulus plan was going to be bigger under a Trump win, just to offset exactly what you said, the potential of, say, 60% tariffs that the President-elect Trump would impose. That didn't happen. And so the thinking now is that the government is maybe trying to keep some of its powder dry and wait to see what happens next. In fact, the finance minister also has said that the policymakers were open to the idea of a larger fiscal deficit next year. So that suggests that we might see more stimulus.
I would have thought that that kind of number, you'd have things flying in a sort of David Tepper style way, but not the case.
No, not at all. Look, this is not the stimulus that markets were looking for at all. This is not stimulus, I think, to begin with. What they're doing is recycling debt. And we've seen this playbook in China over and over again. I don't think this does anything to actually stimulate growth, not at least in a way that's going to be meaningful for markets.
So when you say they're recycling debt, what do you mean?
Well, what they're doing is Italian local governments, you can now go out there and issue more bonds and take all this hidden debt, bring it onto the balance sheet, and then some more. Some of the debt that's owed by the local governments will get transferred onto the central government's balance sheet. So they're just moving the money around. That's great. Brings out, your interest rate payments and so forth, perhaps, and gives you some more money to maybe pay workers who haven't been paid, but doesn't do much.
What is your gamble on the next 12 months in China?
Yeah.
Mr. Tepper, I just referenced him, was sitting here, and that week he called it right. Things have gotten more complicated since then.
Oh, yeah. Look, I think a lot of those calls were actually probably not as right as they sounded at the moment. You haven't gotten a bazooka-style stimulus out of China. You don't have anything that's happening that is going to really stimulate growth. You don't have a muscular housing rescue package. You don't have a household-focused stimulus program at all. And I don't think it's happening no matter what happens in the next 12 months. The prospects of a trade war as of Tuesday, just skyrocketed, obviously. What I think is happening here is that you got Beijing reserving some of that fiscal power and saying once the trade, if this kicks off and really starts hitting us, then we move in.
So, let's talk about the trade war, the impending trade war. In your mind, what does that look like? How does that play itself out? Walk us through the sort of the decision tree here of what could happen.
Well, look, I think the Trump folks are more or less already working on what the plans could look like for the president on day one, right? And how big they want to go. And those debates are starting now. It's all very, very live. Now, we're going to find out once, of course, Trump takes office, what the actual priorities are and how soon he starts making those announcements. But the announcements, of course, could be very staggering, could be very dramatic and very bold, which will have a very real market reaction. We'll see what the actual economy, impact on the economy is. And I think that's where China is stepping in. And they're saying, we will provide the money to our manufacturers, to our factories, as they've already been doing, by the way, to help cushion the blow. So they're going to keep that stabilization effort going.
How should investors, one of the most owned companies in America and one of the most successful companies in America is called Apple. And they have a huge manufacturing reliance on China. What do you think the impact, how would you even think about that right now?
So there's been a target on the back of American companies for a while. And I think when we talk about China's retaliation, outside of doing things like putting their own tariffs, which I don't think mean much in the larger scheme of things, they could go after American companies. And so who do they go after? Do they go after Apple? Or do they say, forget about this? There's a whole bunch of medical equipment and pharmaceutical production happening in China that the Americans rely on. we're going to start disrupting those supply chains. So they could really pick, how hard they want to hit us. Their toolkit is limited overall. We've got a lot, bigger arsenal, but they could still cause a lot of pain.
I think it is, actually, and I think Chairman Powell handled it very well. He said effectively it is a wait and see. We have to see exactly what the policies are. And then he said that what they would do is what you'd expect them to do, which is to put it into their model, which is the best of the U.S. economy, and then make decisions. But I think he certainly is open to the possibility that that modeling, once we know what the policies are and what that mixture is, could lead to either thing. I think it's too early to say one or the other, but I think you're right. It is going to be important to see exactly what the policy mix is, and then, as he says, they don't guess, they don't speculate, but they will decide once they have a better sense of the policy mix.
Well, in kind of a perverse way, Roger, the jumbo cut of 50 basis points caused conditions to tighten. Mortgage rates have gone back up. The 10-year has done nothing but go up in yield since then. So it almost was, what they were trying to orchestrate, almost the reverse happened, yet the market continues to hit new highs and the wealth effect is on full display. So should we change what the neutral rate is right now, given what's happened with the 10-year?
Look, I think the question what the neutral rate is very much going to come into play. As you know, I thought the first move should have been 25 basis points. It was interesting that Chair Powell pushed back pretty hard on the thought that the shape of the yield curve and the level at the 10 and the 30-year was suggesting a loss of confidence around the inflation fighting question and a rise in inflation expectations. But what he also said that I found really interesting is a certain kind of caution about exactly the pace at which they are going to continue to cut rates. And he was clear that they're moving away from sentences that he perceived to be giving forward guidance. So I think to your point, Joe, while he's pushing back on the thought that there's perversity in the markets and that inflation expectations are becoming maybe a little loosened, I certainly heard in his voice a sense that we will take this one meeting at a time. And I think he said very explicitly they're not on automatic pilot or a phrase to that effect.
Yeah, we're going to probably have to manage the deficit by issuing more long-term bonds instead of all these T-bills and do that dynamic, which drives up rates, and trying to manage the deficit that way until we grow ourselves completely out of it. And that's to be seen, right? Because we don't know that exactly. But I do think that the deficit is a key issue that this next Treasury Secretary has to address. If you think of the policy, it's really about pro-growth, so to try to grow out of the deficit. But the Treasury Secretary has to manage it mechanically with more maturity issues.
We've never had pro-growth with this kind of deficit. And again, it's refreshing to think about a Treasury Secretary that will do the right thing. And I'm not saying that either of the two gentlemen mentioned wouldn't be on that track. But we all know that it's made a lot more sense to issue short and hold off on the long until the world comes down. But I want to get back to the Fed that we had yesterday. I thought I heard Powell say that, I think projections have changed since September. And where is there a surprise for markets here that you have not a Fed that's ready to hike, but a Fed that is not? I mean, I know you alluded to they kind of rather not do anything in December, but they're probably gonna. But I think projections have changed since September. What do you think?
Yeah, I think, Tim, if you take the statement and they took out that word further in front of inflation, now he dismissed that. That's not. We don't want to give full guidance, but I think markets did look at it saying, you don't take that up for nothing. It's basically preparing on that. What's going to happen next year is going to change our projections, and we're going to have to start basically factoring that into the SCP in December. And I think that you see higher projections of growth, probably somewhat lower for unemployment, which is what they want, but they cannot really reconcile that with massive amount of rate cuts against it. So I think this Fed is moving towards this pace of cuts, probably slower even, based on that projections. I would think that dot plot shows us fewer cuts than what they projected in September. That will be the change. But the other thing that he did say, is I want to mention last point, they do want to get to neutral not too fast. So, and he did repeat that. I think that's still the case, that they want to drop rates so fast. And that's, I think, why, that speaks to their projections. They're going to be stronger growth outlook. You don't have to move to neutral too quickly.
Going to a different economy. And we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. Long COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.